This is 2011 question 1, and it's a departmental final account of a limited company. So this is the last time, the most recent time that it has come up, and before this it came up in 1999, so definitely worth knowing how to do because it could possibly come up. So we start off by reading through the trial balance and having a look at the additional information below. So the firm is Lamb Limited and it's divided into two departments, and this is the balances were extracted at the end of 2010. Okay, so our year end is 2010. Next we're looking through the trial balance. We have authorised share capital, we have authorised shares of 700,000, but our issued is 590, so we still have a few more to issue. Our buildings, we're given the cost in brackets. So the cost is given to us in here in the bracket, and this is the net book value. So just be careful of that when you're calculating depreciation. Furniture and fittings, our cost again is given to us in brackets, which means that the 160,000 is actually the net book value figure. Then we have a loan, a debenture, 6% debenture, and that was issued on the 1st of the 4th, 2010. So if we have to calculate interest, we need to be careful because we didn't have that loan of 140,000 for the whole year. So you're going to need to work with months in this question. Debtors are 88,000 and our creditors are 63,000. Now we have information from the fashion department here and the sportswear department here. So this is related to our trading account. So we're given stock, purchases, sales and returns in the fashion department, and then stock, purchases, sales and carriage in the sports department. Then we're given some other information down here, and you may need to split these costs out. So we've insurance, we've salaries and general expenses, light and heat, advertising, VAT. So just be careful of VAT. VAT there is in the credit column, so that's a current liability when you get to your balance sheet, and your PAYE and PRSI are also in the credit column, and so they're also going to be current liabilities. Now just bear in mind they can sometimes end up on the debit side, or they might be shown on the debit side, and you need to know that they will be current assets if that's the case. So you always need to check those guys and see what side they're on. Then we have directors' fees, they're just another expense, and then we have our profit and loss balance at the end. Okay, so let's have a read through the adjustments at the bottom and we'll see what we need to do. So we're given information on stock at the end of the year, fashion and sportswear departments given to us. Then our depreciation is to be provided as follows. We should calculate 2% of cost on buildings, and furniture and fittings is 12.5% of book value. So you're going to be using the figure in brackets for the buildings and the figure that's actually in the column of the trial balance for the furniture and fittings. Then it tells us the floor space of the firm is divided as 75% for fashion and 25% for sportswear. So if you walked into the shop, there'd be more fashion than there is sportswear. Provision should be made for debenture interest due at the end of the year, so we need to be careful about the fact that we only got the loan at some point throughout the year. We got it on the 1st of the 4th, the 1st of April, and we're trying to calculate how much months of interest are due at the end of the year. So included in advertising is a cheque for €8,000. Okay, so €8,000 of the cheque, €8,000 of that 38,000. See this 38,000 up here? 8,000 is for a campaign for the year ended 31st of the 3rd, 2011. So you have €8,000, and that €8,000 worth of advertisement, that brings up advertisement to the end of March 2011, so we need to do an adjustment there. And expenses applicable to both departments should be divided on the basis of floor space or sales where appropriate. So do your few little workings first, then split out everything, and then go into your trading profit and loss account, and then finally your balance sheet. So the balance sheet is as normal, a normal standard balance sheet that you would have with any type of question 1. However, the departmental trading profit and loss account is the one with all the columns. You'll have a few extra columns for each department. So these are my adjustments for the question. So we're looking at the additional information below the trial balance, and it says the first thing is that it has our stocks at the 31st of the 12th, 2010, and they're fashion and sportswear. Now in this question we're asked to do the trading, profit and loss account and the balance sheet. So we need to make sure that we're recording where everything is going, whether it's in the profit and loss or the balance sheet. Okay, so we've closing stock of fashion in the fashion department of €63,000. And stock always goes in two places. First of all, into the trading account, and secondly, in the current assets in the balance sheet. And I've just written out the same there for sportswear. We have stock of €39,000, and that's going to go into my trading account and also into my current assets in the balance sheet. Okay, you don't really need to write that out. If you want to skip on, save yourself a minute or so, you can go straight onto the second one once you know where they're going. Okay. Second one is depreciation, and it says depreciation is to be provided as follows: buildings at 2% of cost. So we're depreciating buildings at a rate of 2% for the year based on the cost price. Okay, so the buildings in this question at cost are €750,000, and that's the figure that's in the bracket beside buildings. Okay, so the cost is 750,000 and I'm getting 2% of that, okay, which gives me €15,000. Now that €15,000 is for the company as a whole, but remember, we're splitting everything up into two separate departments, the fashion wear and the sportswear. So that's why I've just written expense and split. Okay, we also need to know it will be an admin expense when we put in our expense. So maybe I should write admin expense there. Admin expense, we're going to have our buildings, and then we're going to split that 15,000 into the sportswear and the fashion. Okay, then complete the double entry. Then you need to add in any previous depreciation. Well, how did I calculate the 110,000? Well, I know my cost is 750,000 and the 640 in the trial balance is the net book value. So the difference of those two figures is what the previous depreciation is. So at cost they were 750,000 and now they're only worth 640. So how much have I written off in previous years? That's your 110,000. So you're adding these two figures together to give you your new accumulated depreciation. And that's the figure that's taken from your fixed assets in the balance sheet. Now, that doesn't have to be split, okay? The balance sheet is not split into two different departments. It's only the profit and loss. So if you see an expense anywhere or a gain, you're going to have to split them, okay? Then we've got depreciation of furniture and fittings at 12.5% of book value. So my book value figure for furniture and fittings is the figure that's actually in the trial balance. So the €160,000 multiplied by 12.5%. And that's a charge of €20,000 this year for the depreciation. So that's, again, an expense and it's going to be split. Maybe I should write admin there as well. Okay, so I'm going to split that into between the two departments. Again, follow through with my double entry. Previous depreciation, well, I'm given the net book value of 160. My cost was 200, so that means I've previously written off €40,000, which brings my new accumulated depreciation, I'll write that there, new accumulated depreciation to €60,000, and that's taken from the fixed assets in the balance sheet. Okay, next then is the debenture interest. It says provision should be made for debenture interest due at the end of the year. So I told you already we need to be careful of months. So it says in the trial balance 6% debentures issued on the 1st of April 2010. So we have to pay a rate of 6% interest. Okay, that's the interest charge for the year. Now, if you only got a loan on the 1st of April, would you be willing to to pay interest for a whole year when you didn't have it for a whole year? No, you wouldn't. So you're only going to pay interest for the months that you actually had the loan. So if you got it on the 1st of April, that means you had it for April, May, June, July, August, September, October, November and December. So 9 months. Okay, so that's why I'm going €140,000 worth of a loan by 6% by 9 over 12, which gives me €6,300. Again, I'm going to split this expense and it goes in at the bottom of the profit and loss. Okay, but I will be splitting it. Okay, always check and see if there's any interest paid. Now, this question does not, but just you need to make sure that you're double checking. Well, have we got any paid? And if there is, you just take it away. So we still are yet to pay the 6,300. So my due amount is €6,300 as well, and that's going to be a current liability in my balance sheet. Again, we don't have to adjust or split the balance sheet figures. The last working then is included in advertising is a cheque for €8,000 for an advertising campaign for the year ended 31st of the 3rd, 2011. So, if you look at your trial balance, your advertising figure is €38,000. Now, you need to be careful here because the cheque for 8,000, so only 8,000 worth of that advertisement is for a campaign that runs into next year. So you're not getting 3 months of the 38,000, you're getting 3 months of the 8,000. So basically, the €38,000 is for all of the advertising campaigns that were paid for this year, okay, in the year of 2010. But included in that is a cheque for €8,000. And that €8,000 has got to do with an advertising campaign that runs into the end of March next year. Okay, so we have paid €8,000, and of that €8,000, 3 months of that advertising is going to happen next year. So it shouldn't be included in this year's figures. So I'm getting 3 months of the 8,000. So 8,000 multiplied by 3 over 12 gives me €2,000 prepaid. Okay, so of that 8,000, 2,000 is for next year. So if it's not happening this year, it shouldn't be included in this year's accounts. So now I'm adjusting the larger figure, I'm adjusting the total. So my total advertising figure from the trial balance is €38,000, and I'm taking the amount that's prepaid for next year out of that. Okay, so that is €2,000, which leaves my charge for this year for advertising that actually took place this year is €36,000. Okay, I'm taking that 2,000, that €8,000 is actually included in that 38, so that's why I'm removing 2,000 from that. Okay, and my charge of the year is €36,000. Again, it's an expense which will be split, but we know it's a selling and distribution expense because advertising is related to selling. Okay, next step is doing out your table where you split out all the costs. So I've just prepared this in advance, and you need some headings. You need 5 headings. So one for your expenses, where you're going to list your expenses here. Then you're going to say how you're dividing them out. So what basis are you dividing these out by? Okay, and it's either going to be floor space or sales. Then you've got your totals in here, your total expenses, and make sure that if you've adjusted them up at the top, make sure you got your adjusted figures down here. Then you're going to split these costs into the 2 departments. So you need the 2 departments, your fashion and your sportswear. And what I like to do is I just like writing above it so I don't have to be looking back at the question the whole time. I'm writing FS means floor space is 75%. So if you're dividing it by floor space, it's 75% is for fashion wear, and 25% then is for sportswear. So that's your floor space. And then I've written my sales. So if I'm dividing my sales in fashion is €600,000 worth of sales, and my sportswear is €300,000. So obviously 600 plus 300 gives me my total sales here of €900,000. So if we're going to be doing it by sales, we're going to use the 600, 300, 900, and if we're using floor space, then it's just a quick percentage. Okay, I've also filled in my basis, so the majority of them are floor space, and sure, we'll have a discussion as we go through them. Okay, so the first one is buildings depreciation. Oh, just one more thing. I also, when I was writing these in, I first of all went to my adjustments, and I said, okay, well, which ones do I have here? And so the first 4 there are actually the ones that I've adjusted, which are coming from up here, and the remainder then, these last 4 are coming from the trial balance. So if I adjusted one in the trial balance, from the trial balance already, I didn't put it in twice. So just make sure you only have like your depreciation in the ones, you don't have your advertising in twice, that kind of thing. So the first one is buildings depreciation. I'm dividing that out by floor space because obviously if one department has a bigger floor area, they should be the depreciation should be charged to their department. Okay, if they've got a bigger area, okay, they should be charged more of the depreciation. So we're dividing this 15,000 out using floor space. Okay, so I know up here it's been given to me in the question that the floor space in the fashion department takes up 75% of the floor space. So into my calculator, I'm going to put the total expense, 15,000, and I'm going to multiply it by 75%. Okay, so that gives me €11,250 for the fashion department. So 11,250 going in there. And if 11,250 is from the fashion department, and I know my total is 15,000, I'm just going to go minus 15,000 is €3,750 going into sportswear. Or, of course, if you want, you can still go 15 by 25%, and that will give you your €3,750. Okay. Next, then, my furniture and fittings. Again, that's floor space. For similar reasons. So we're going 20,000 by 75%, which is €15,000. Which leaves €5,000 in my sportswear department. Debenture interest is also by floor space, so €6,300 by 0.75, which is 4,725. and subtracting my 6,300 there to find out my sportswear figure of €1,575. Now, next is my advertising, and I'm dividing that out based on sales. So this 36,000 needs to be split up into the two different departments, and we're doing it based on sales. So to do this, you're putting your total, I'll write it down here, total expense over your total sales multiplied by sales in relevant department. Okay, so my total expense in this question is for advertising is €36,000, and I'm dividing it by the total sales, which I've calculated as 900,000. Okay, pressing equals, and then I'm multiplying it by the sales in the relevant department, and for my fashion that is €600,000. So that means 24,000 of that expense is going into the fashion department. 24. So how much is left for my sportswear? 36. €12,000. Okay. Insurance is floor space, so straightforward. 32,000 by 75%, which is €24,000. And again, minus 32. We've got 8,000 left over for sportswear. Salaries and general expenses is divided out by sales. So 120 is my total expense divided by my total sales, which is 900,000, equals, I'm multiplying that by my sales in the relevant department, which is 600,000 in the fashion. So that's 80,000 going in there, which leaves 40,000 in my sportswear. Light and heat is done out by floor space. So I have 70 by 75%, which is 52,500. And taking that then from my 70, which is €17,500. And last but not least, we've got director's fees. They're being divided out by sales, and the total is 30. So my total expense is 30. Dividing it by the total sales, which is 600,000. And I'm multiplying it by the sales in the relevant department, which is 600,000. So that gives me 30. I've gone wrong there somewhere. Hold on. Put that into the calculator again. See the way I knew there I'd gone wrong? Because my total was 30 and it was saying I was putting 30 in here. So I obviously had a few extra zeros somewhere. So my total expense is 30,000 divided by 900,000 multiplied by my sales in the relevant department, which is 600,000. So it's 20,000 going into my fashion department. That sounds a bit better. And we've 10,000 in here. So now I have them split out. So you still need to remember which ones go into selling and distribution and which go into admin. So I'm looking, this is definitely going to be admin. That will be at the bottom of the profit and loss. Advertising will be selling and distribution. Insurance will be admin. Salaries and general expenses, admin. Light and heat, admin. And director's fees, admin. Okay, so most of them are admin except for debenture interest, which will go on its own at the bottom, and advertising will be selling and distribution. Okay, and now we're ready to go and actually do the profit and loss account. So this is the trade and profit and loss account. A few things to note in terms of layout. We've got a full heading there, full proper heading, trade and profit and loss account for year ended 31st of the 12th 2010, and that will get you 1 mark for doing that. Then we've got 6 columns and they need to be labelled perfectly. So total, fashion, sportswear, total fashion, sportswear. These 3 here are our outside column and this is our inside column. So think of it like that. So outside and inside column. Okay. I'm going to get rid of that line now, but I just wanted to show you what I meant by outside and inside column. Okay. Then we're starting off with our sales as always. Okay. In this question we have sales returns, but we only have sales returns for fashion wear. Okay. So first of all, our sales are going in. Our total sales are €900,000, and that's split into 600 in fashion and 300,000 in sportswear. Now that those two figures are given to us in the trial balance, and you just have to calculate the total yourself. So that's why you're getting 3 marks for the total and 2 for each. So that's 3, 4, 5, 7 marks for your sales figures alone. Okay, at that point you've got 8 marks already if you've got your proper heading in. Then we have returns coming in. Okay, so returns in are sales returns. We've no sales returns in the sportswear, but we do have 3,400 worth of returns in the fashion department. So 0 plus 3,400 gives you this 3,400 total. So make sure you're showing it in the total as well. Next is our less cost of sales section. We start off as always with opening stock. We have 46,000 in sportswear and 53 in fashion wear, or in fashion, which leaves us with 99 as our total. Then we've got our purchases. We have 298 purchases in fashion and 158,000 in worth of purchases in our sportswear department, totaling €448,000. We've carriage in one department, in sportswear department, so we've carried in a 5,000 here. We've got nothing in the fashion, which leaves us with a 5,000 total. So make sure carriage in is always up here. If you see carriage out, that is in your expenses. Okay, then you add those 3 up. Your stock, your opening stock plus purchases plus your carriage in. If you have import duty, that could be in there too. And they give you these figures here. Okay, and from them you take your closing stock, your 63,000 and your 39,000, which gives you 102,000 in total. Okay, you're then bringing these out. So for example, this 209 and 39,000 here, that total is brought over there to 170,000. So 209,000 minus 39 gives it €170,000, and that's been brought to the outside column. Okay, then your 343, I'm looking here now, 343,000 minus 63, that will be brought here as your 280,000 total, and then your 552 minus 102 will be brought here as 450 as your total. Okay, so make sure you're bringing it over to the correct heading, correct aisle. So your middle will end up in your middle, your inside column will end up on your inside, and your outside on the outside. That gives you your gross profit figure then. And we're getting that by, hold on, I'll just get rid of these. You get your gross profit figure of €446,000 by getting this figure here, your 896 minus your 450, which leaves you with €446,600, 446,600 as my total gross profit. And that is the same format then for your fashion department and your sportswear department. So we end up with a gross profit of 130,000 in sportswear department, and our fashion department has a gross profit of 316,600. Next, we're moving on to our expenses, and we've got our admin and our selling and distribution. This information is coming straight from that table that you have in your working. So we've got our insurance, salaries and general expenses, light and heat, director's fees and depreciation. We calculated all of those already, so those figures are coming straight from that table. So we'll just show you there. For example, your insurance 32 is split into 24,000 and 8,000. So you're getting 4 marks for each of those guys there. You're actually getting 5 marks for your depreciation figures, these two here. Okay, so I'm not going to go too much through them because you have them already done in your table. And as I said when we were doing the table, we only have one selling and distribution expense, which is advertising. Okay, then that you add all of those up. You see these totals here. You don't have to do them if you don't want to. You don't get any marks for them. So if you want to just leave that blank and just have your 36 and then add them all up and get one total down here, that's totally fine. Okay, I actually think it'd be easier to do that. So then your totals are, if you look here, we've got this 287 plus your 36, and that's where they are getting this €323,000 from. Okay, as well, you have 202 here, 202,750 plus 24. Add those two together, and that's where that 226,750 is coming from. And the same here, you've got 84,250 plus your 12,000, which those two added together bring your total expenses in that department to €96,250. Okay, then they are your total expenses. So from your gross profit figures up here, take your total expenses away, and that leaves you with your operating profit of 123,600, and the same goes for the other two departments. Then you've got your lesser debenture interest, which also comes from that table. 6,300 was the total, which we calculated in our adjustments, and then we split it up into these two figures. So we're getting 6 marks for that. So that's a lot of marks there going for that. And then if you have, that'll give you your net profit before tax. There is no tax in this question, so you just leave it at that. And then you need to we had a profit and loss balance at the start of the year, and that was sitting in the credit column. And when it's in the credit, you add it on, but if it's in the debit, then you need to take it away. So if it's in the credit in this question, so we are adding that figure in, which leaves us with a profit and loss balance of at the end of the year, the 31st of the 12th, 2010, as €123,400. And that's that. You're then going on to do the balance sheet. So just scroll up here. So balance sheet is straightforward, nothing new here, same as a standard balance sheet that you'd be used to. We have our heading, we're getting 1 mark there for that heading. Balance sheet of Lamb Limited as on or as at the 31st of the 12th, 2010. We've got fixed assets there is our first heading, which we have buildings and furniture and fittings. Okay, so these figures are your cost figures, so they're coming straight from the trial balance. Your 125 and the 60,000 is coming from my workings where I calculated my new accumulated depreciation, and it's your buildings of 750. Your cost minus your accumulated depreciation gives you your net book value. Okay, and then you're adding up your two net book values, and you're carrying this 765,000 forward, and you're closing off your costs and your accumulated depreciation columns. You're not carrying them any further. Okay, so then we've got our current assets. We only have 3 assets. We've our stock, and that's the combined stock. So you're not showing the two stocks separately. You need to add them together, the 63,000 and the 39,000 euro. So you're adding those two together. Be careful of that. Our debtors is coming from our trial balance, 88,000 euro. You don't need to worry about provision or anything here. Now there could be a provision, but you know how to work it. If there's any increase or decrease, it goes in as an expense or a gain, and then you need to show your provision as taken away from your debtors in the balance sheet. That's if there is a provision, which there isn't in this question. We also have advertised and prepaid of 2,000 euro, which I labelled when we were doing our workings, and those 3 added together then gives me this 192,000 euro here. Okay, less creditors amounts falling due within 1 year, so amounts that we have to pay back within 1 year. Well, we have creditors coming straight from the trial balance of 63,000 euro. We have bank 9,800 euro coming straight through from the trial balance. How do I know that that's a liability? Because it's sitting in the credit side. So that 9,800 is sitting on the credit side of the trial balance, so therefore it's a current liability. If it was sitting on the debit side, then it would be a current asset, and it would be going up here. VAT then is also a current liability, and so is PAYE. I told you need to be checking the sides of those as well. And then we have debenture interest due, which we calculated in our workings as 63,000 euro. So these 5 guys here added up gives me this 103,600. So you've got 192,000 minus your liabilities leaves us with 88,400 euro. Okay, and I'm adding that then to the 765 above it, which gives me my total net assets, and I prefer if you actually labelled that total net assets 853,400 euro, and that's the first balance. Next is my financed by section. So we've calculated up here that the business is worth 853,400 euro. Now we're trying to find out, well, where did the business get their money from? How have they financed a business of this value? Well, the first thing is your creditors amounts falling due after more than 1 year. We've got a loan, 8% debenture of 140,000 euro. Then you have your capital and reserves. The first thing going in there is your ordinary share capital. You're authorised, so you're showing you're authorised, but you're only carrying forward with your issued. So your authorised is 700,000 euro worth of shares, and your your issued is 590,000 euro. So the last thing is add in your profit and loss balance of 123,400, which gives you 713,400. Now you don't actually get any mark for writing that in there. You still need to finish it off. A lot of the time you would get a mark for doing that. Then add that to the existing 140 that's here already, which gives us our last figure of our capital employed as €853,400. And that's that question finished. So the longest part would probably be splitting out the expenses. And it's just making sure that you know what basis to divide them out by, and that you're carrying them forward correctly.